All right, Colleen.
Yeah.
Let's talk a little bit about the industrial market. You are our industrial specialist here at Eve Capital. Tell us a little bit about what you're seeing in the local market right now.
Right now, we're seeing something that we haven't seen since 2008, and that's a decrease in pricing. We've gone down about 3%, I would say. This is a long play. This is a user owner. This is somebody who has a use for this building or a tenant in tow right now.
And what kind of tenants are you seeing in the market that are still in play here?
We're seeing a lot of smaller businesses that are not quite ready to buy, that are the tenants.
Yeah.
The majority of the people buying are the owner user right now because they have a practical use for it, right? This isn't about worrying about the market if you're an owner user. However, if you're an investor, it's about the market, and you really have to have a reliable tenant in tow. So these are all things that we're looking at right now. But owner users are still fantastic because there's a lot of vacancy. So if you're looking for a chance to buy for your business, now would be the time.
So you're working with a lot of owner users now.
Yeah.
What kind of loans are they able to get? Is debt still available for owner users in the industrial market?
It hasn't been easy, only because the market's been so unsure and the interest rates have been a deterrent, right? They've made it kind of hard for people to get in because they don't want to be coming in at a price that they can't rationalize. It doesn't even matter if they can afford it. They're hearing, oh, interest rates are at 7% now. Oh, how horrible. When in reality, gosh, I started in the market when, what were we at?
They were double digits.
Yeah.
18 to 20% was the norm for commercial real estate.
Yeah. And so I'm sort of like a little bit going like, hey, you guys have just not budgeted correctly because of so many years of being at such a low rate, right? It's been kind of a false market. Yeah. You're always going to be paying for one or the other, right? So you're either going to be paying for the money, which is your interest rate, or you're going to be paying for your property, which is going to be the price on the property. So when interest rates are low, the property prices are going to go higher because you can afford more. And people go, oh, we can buy more for our money. But when interest rates come up, prices have got to start coming down so that people can then afford it again. And this is where we're stuck right now. Is nobody wants to come down and nobody wants to pay for more. So we've got a little bit of a standoff in a buyer's market, and sellers still think it's a seller's market.
How are you coaching your sellers through that?
Well, I'm just trying to be realistic with them. And I got to be honest with you, it's not easy because they're stubborn. They want that money that they were told they could get 2 years ago. And not only is 2 years ago too long to value, but a year ago is too long to value. We've got to value within the last 6 months and watch what the price has been doing. Not what's only sold, but what is the market at right now.
You are seeing a lot more on market. Are you trading any off-market deals at this time?
Off-market isn't what everybody thinks it's going to be. It's not necessarily a better deal at all, because if they were really interested in selling, they'd go on market to get the best price.
Yeah, the myth of the off-market is huge.
Yeah, they think distressed sellers are going to be, just falling in your lap if I offer you money. No, they're smart enough to know now to bring in an agent and to say, hey, our best chance is getting it on the market. It's a hard market right now. It's hard for everybody. I don't care who you're talking to. It's going to be hard for the seller. It's going to be hard on the buyer. They're going to spend more. The seller's going to get less. And the agent doesn't have as many people to offer it to right now. It's a hard market. And so if you're off market, it's because you're wanting somebody to come to you with price that you can imagine that it's worth. And that's old school thinking.
It's been a long market cycle.
It's been a very long market cycle, and we all are expecting that. Yeah. So making that change is kind of like, somebody once told me, you never know when you've hit the peak of the market, because once you've hit the peak of the market, you've already had to come down to realize that the peak was up here. Otherwise, you're still going up. So what's the peak? But then when you come down, you've already missed it. So it's the same thing is very true with the downwards. We don't know what the downward peak is either, because until it goes back